Hello everyone. Welcome to the market opening bell on Monday, January 5th, your 10-minute guide to the stock market. The Hong Kong stock market opened higher with a red candle on the first trading day of 2026. The Hang Seng Index opened up 86 points or 0.3% at 25,717 points. Then the gains expanded, recapturing the 26,000 mark, rising as much as 715 points to a high of 26,346 points, and closing at 26,338 points, up 708 points or 2.8%, with turnover of 140.8 billion yuan. The H-share index closed at 9,169 points, up 255 points or 2.9%. The tech index closed at 5,736 points, up 220 points or nearly 4%. Last week, the Hang Seng Index accumulated a gain of 519 points or 2%. The H-share index rose 253 points or 2.8%, and the Hang Seng Tech Index climbed 237 points or 4.3%. Technically, the Hang Seng Index has finally broken through the 50-day moving average and the 26,000 mark, but whether it can stabilize above remains to be seen. If it holds above 26,000, it could test 26,530, with the next target at 26,880. Mainland A shares were closed last Friday and southbound trading was suspended. In his 2026 New Year's address, President Xi Jinping stated that in 2025, the mainland relied on innovation to empower high-quality development with deep integration of technology and industry. Innovative achievements emerging one after another, AI large models chasing each other, new breakthroughs in independent chip R&D, making it one of the economies with the fastest rising innovation power. The market is driven by favorable national policies and incoming capital, providing support for the technology sector. Baidu 9,888 surged 9.5%, as its subsidiary Kunlunxin has submitted a listing application to the stock exchange in confidential form. Huarong 01347 has finalized the acquisition of approximately 97.5% equity in Huali Microelectronics, with the stock price rising 9.4%. The total consideration is about 8.27 billion RMB. Huarong plans to issue approximately 190 million new consideration shares to its parent company Huarong Group and related investment funds such as the Big Fund Phase 2 and Shanghai Integrated Circuit Fund at an issue price of 43.34 RMB per share. Additionally, it plans a non-public A-share issuance to raise 7.556 billion RMB, of which about 51%, 3.856 billion, will be specifically used for technological upgrades and equipment refurbishment at Shanghai Huali, enhancing 12-inch production line specifications and specialty process R&D. The acquisition fulfills Huarong Group's commitment made during Huarong Semiconductor's listing on the STAR market to resolve intra-group competition within 3 years, consolidating mature process assets within the group onto the same listed platform. The acquisition will add approximately 38,000 12-inch wafers per month in capacity for Huarong and inject 65, 55 nanometers and 40 nanometers logic and specialty process platforms, addressing the company's shortcomings in higher-end mature processes. Xiaomi Group founder, chairman, and CEO Lei Jun stated that this year he will focus more energy on automobiles with a delivery target that is neither too high nor too low, set at 550,000 vehicles, hoping to exceed this by the end of 2026. This target represents a growth rate of about 34% compared to the actual deliveries of approximately 410,000 vehicles in 2025. NIO 09866 founder, chairman, and CEO Li Bin stated that in 2026, NIO, Onvo, and Firefly will deepen key markets while jointly expanding into lower-tier markets. That is to say, the vast markets in third-tier and below cities, counties, towns, and rural areas, completing sales and service network coverage in over 210 prefecture-level cities. He revealed that the company will launch 3 new models this year, expected to further increase its share in the high-end large vehicle market. According to previous media reports, these 3 new models may be the Neo ES9, ES7, and Onvo L80. The Macau Gaming Inspection and Coordination Bureau announced that Macau's gross gaming revenue for December 2025 was 20.89 billion MOP, up 14.8% year-on-year, recovering to 91% of pre-pandemic levels. The figure was slightly below the market's expected 18%, but mainly because the market had gradually raised expectations from an original 15%. For the fourth quarter of 2025, quarterly gaming revenue grew 15% year-on-year and 6% quarter-on-quarter to 66.1 billion, hitting a 6-year high. For the first 12 months of 2025, Macau's cumulative gross gaming revenue reached 247.4 billion MOP, up 9.1% year-on-year. Looking ahead to 2026, Macau's total gaming revenue is expected to grow 5% to 6%, driven by an anticipated 7% to 8% increase in mass market and slot machine revenue, while VIP room revenue is expected to decline 5%. More importantly, industry profits are expected to grow 6% to 7% year-on-year, finally poised to outpace revenue growth. On the first trading day of 2026, the 3 major US stock indices were mixed, with the Fear Index VIX rising 0.4 points or 2.9% to 14.51. The Dow rose 0.6% to close at 48,382. The S&P 500 rose 0.2% to 6,858. The Nasdaq Composite fell 0.03% to 23,235. The Nasdaq Golden Dragon China Index, reflecting Chinese concept stocks, surged 329 points, or 4.4% to 7,859. Tech giants performed flatly overall, with Tesla experiencing a 7-day losing streak after releasing full-year EV delivery data, falling 2.6%. Tesla announced global deliveries of 1.636 million electric vehicles last year, down about 8.6% from the previous year, marking the second consecutive year of decline. BYD's EV sales grew nearly 28% to over 2.25 million vehicles last year, surpassing Tesla for the first time to become the world's largest EV seller. Our stock pick today is DRINDA New Energy Technology 002865. DRINDA New Energy Technology is primarily engaged in the research, development, production, and sales of photovoltaic cells. By the end of 2022, the group took the lead in the industry by achieving large-scale mass production of N-type cells and completing a comprehensive upgrade and iteration of N-type technology. Currently, the group has 2 major N-type cell production bases in Chuzhou and Huai'an, with a total cell production capacity exceeding 40 gigawatts, ranking at the leading level in the industry. Focusing on the rapidly growing overseas photovoltaic demand, the group adheres to a globalization development strategy, continuously expanding and certifying new emerging market customers in Asia, Europe, North America, Latin America, Australia, and other regions, while steadily building and improving a global sales and service network. It possesses global customer service capabilities, and the top-ranked photovoltaic module enterprises in global shipments are all long-term stable customers of the group. In overseas markets dominated by India and Turkey, the group has developed into a leading supplier of photovoltaic cell products in those markets. According to statistics, In the first 3 quarters of 2025, China's cumulative photovoltaic cell exports increased by 72.1% year-on-year, maintaining high growth for 3 consecutive years. The group achieved a significant increase in the proportion of overseas sales, with the overseas sales proportion in the first 3 quarters of 2025 surging from 24% in 2024 to 51%. In addition to expanding the cell export business, the group is also continuously exploring diversified models such as technical cooperation, capacity construction, and investment cooperation to plan and lay out overseas high-efficiency cell production capacity. For example, it has formally signed a strategic cooperation agreement with local module customers in Turkey and is actively advancing capacity construction. The two parties are jointly building a high-efficiency cell project to meet the urgent demand for high-performance and high-reliability photovoltaic cells in Turkey and other global markets, filling the structural gap in regional cell capacity and strengthening the group's international capacity allocation and global customer service response efficiency. In the Chinese market, according to data from the National Energy Administration, from January to September 2025, new photovoltaic installed capacity reached 240.27 gigawatts, a year-on-year increase of 49.3%, and the domestic cumulative installed capacity historically exceeded 1,000 gigawatts, entering the terawatt era. In the future, with the expansion of domestic application scenarios, such as large-scale desert, Gobi, and wasteland-based projects, green electricity direct connection, zero-carbon parks, and non-electric utilization, photovoltaic hydrogen production, continuous improvement of power infrastructure, and ongoing advancement of market-oriented reforms in new energy electricity prices, domestic installed capacity is expected to maintain steady growth. After nearly 2 years of market-oriented elimination of backward capacity and policy guidance, the supply-demand balance in the photovoltaic industry will recover. Industry concentration is expected to further increase and the competitive landscape will be reshaped. As a leading enterprise in the photovoltaic cell industry, the group is poised to achieve profitability, recovery, and sustained growth. Recommended buy price HK$21. Target price HK$23.5. Stop loss level HK$19.5. I do not hold the above stock.